All right, good morning, everybody. Thanks for joining, and we're excited to have you here for the Survive and Thrive Preparing Your Business for Funding webinar. I am Carlos Sugranes, and I would basically like to introduce the Cook County COVID-19 Recovery Program, if you all don't know. But without further ado, we'll go ahead and start this webinar. So before we actually start with information, I just wanted to share everybody some e-learning tools and etiquette. For any questions that pop up during this presentation, because we will be speaking a lot of information, feel free to use the Q&A function. If you have any technical problems, feel free to use the chat. We will have a panel at the end. So a lot of that Q&A, we're hoping to really use it for that panel time to really have nice discussions. So please, again, use that Q&A function if you have any questions. Now for today's webinar, we'll cover 4 basic topics of the first one, basically introducing the COVID-19 Recovery Small Business Assistance Program. And we'll follow up with preparing your business for funding and cash flow management. And then we'll top it off with the American Rescue Plan programs and give you a bit of description on each. And we'll be able to discuss that in the Survive and Thrive panel. And you'll be able to meet a good host of panelists that come from this coalition. This small business assistance program is really made up of a coalition of the business support organizations that you see here. These are the big 8 really that started the coalition, and we actually have a lot of other organizations that make it up. You might be familiar with some of these if you have signed up with the business advising program, but today you'll hear from the Illinois Restaurant Association, WBDC, and Chicago Trend. Again, these are all organizations that you'll hear from soon enough. They make up this Cook County COVID-19 Recovery Small Business Assistance Program. Like I said, some of you might have been familiar with this, but for those who are not familiar, this program really provides advisory services, webinars like these, and other trainings. So if you are signed up for our mailing list, please sign up. We will send you the website at the end of the actual event, so you can kind of hear about all the webinars and trainings that come out of this coalition. And our mission really is to build that foundation of a suburban small business ecosystem. Really, that's what we really want to do here and what our goal is. And we actually just recently came out, we had a direct financing assistance program, which we provided grants, but that currently is now closed. However, our business advising sessions are still open and you can still take advantage of it. Now, to introduce somebody who's part of this coalition, I'd like to introduce Abby Scanlan from WBDC.
Hi, good morning, everybody. Again, my name is Abby Scanlan. I am the Director for Access to Capital at the WBDC. And just like Carlos was saying, I've had the pleasure of being a part of this coalition and helping small business owners throughout this pandemic and all of last year. And as we continue to survive and thrive past the pandemic. So I'm just going to turn my camera off really quick so that I can do the presentation. And we'll get into this. So for the next part of the program, we are going to talk about preparing your business for funding and basically the foundations of finances. So essentially, this is a historic moment in the American economy. Small business owners have access to the lowest rate of capital out there, be it the government and their funding and other resources. So I don't know about you, but I am a firm believer that it's the small businesses and the courageous entrepreneurs that are out there that typically keep the economy going. And so this support that we're getting right now is just amazing. And it's really to really keep the lights on for these businesses. That's kind of been our mantra, is keeping their lights on and to support their ongoing progress and success. So with all of that programming that did come out, though, we did see a problem amongst the businesses, right? So as part of this coalition, the WBDC did do a lot of grant reviews and et cetera. And what we found was that businesses were not really prepared to apply for these opportunities. So today we really want to spend some time discussing some of the foundational pieces like the financial statements when it comes to business finances, as well as some tools and tips from our panel that we're going to share so that, we can continue on. All right. And again, if you do have questions for our panel or for any of us, please use the Q&A box at the bottom of your Zoom screen. We'll be able to answer, or we'll try to answer most of those at the end. And that's it. So before we get to the panel, let's get to the financial statements. All right, so these are the three basic financial statements that together tell the majority of the story regarding the financial health of a business. And it also connects the dots as to what is happening within the business operations. So we've got your income statement, which is also known as the P&L. This is going to highlight what you made and what you spent. So key idea from here is that you check and see what your net income or your net margin is. The next financial statement that we typically like to look at is the balance sheet. This is going to highlight the business's assets or what you own, and then what you owe, which is the liabilities. So from here, the idea is to evaluate what your total assets are as a business. And then the next statement, the third and final statement, is going to be your cash flow statement. This highlights what your cash or where your cash is coming from and where is it going, right? And from here, this statement is going to tell you if there was sufficient cash to pay the expenses. Now, I like the way that this slide is kind of diagrammed, because it shows, within all of these three statements, how they flow into each other, right? And here's one statement that I can say, or one kind of mantra that I love about talking about the financial statements too, is you cannot manage what you haven't measured, right? And that's what these are about, right? Having the knowledge to look at your financial statements in a really profound way. This is going to help you measure what's going on with the business and then manage it appropriately. All right, so we realize that you probably already are pretty familiar with most of these financial statements, but we want to start with the section with an overview of why these are important for you to understand as the business owner. So things to keep in mind, right? These statements should give you the bird's eye view that helps you ask the more detailed follow-up questions about operating performance and financial management. Additionally, these are the statements and the language too, because I think that sometimes is lost when you talk to a lender or an investor or whoever when it comes to asking for capital, right? This is the language that potential financing partners will use to shape their decisions on whether they are willing to provide capital. And again, as a lender or as an investor. So this is just going to be a refresher on how these are the core tools to measure financial performance. And before I dive into them further, as we start this presentation, I really want everyone to ask yourself, which one of these financial statements do you really feel is the most important? Is it the income statement? Is it the cash flow statement? Or is it the balance statement? We tend to find that many business owners are very comfortable with the income statement, right? Because they want to check on the profitability of the business. And then, most other owners are then going to look at the balance sheet backwards and forwards, especially when it comes to the short-term assets and liabilities, because you're often feeling a sense of urgency either day to day or week to week, right? And then we have other business owners that aren't comfortable with the cash flow statement, which is why we often hear, I'm growing, but I'm still cash hungry. So we'll actually spend a little bit more time on that cash flow statement because I feel like that's going to be pretty critical to surviving and thriving and key to the, getting past this pandemic. So, all right. So first things first, the income statement. Really quick overview. This is going to showcase, again, the revenue of the business or what you made minus what your expenses are, and that's what you spent. which leaves you with the net income or the net margin. This equates to the business's profits. So let's look at this example here. This income statement is a tally for the year, and it's a traditional income statement. We've got nothing too exciting here, right? We've seen some pretty elaborate income statements over the years, but this is just pretty basic. We've got your gross revenue, which is your sales for this business. It was $10,400,000. And then we have your cost of goods. So again, let's talk about the language, right? You can also, it's also known as the COGS. This refers to the direct costs of producing the goods sold by a company. So this amount will include the materials and labor directly used to create the product or service. So for here, the cost of goods for this particular business was $6,760,000, right? And from there, we're going to take the gross sales or revenue minus the COGS. That's going to be your gross profit. And in this example, it's $3,760,000. So the other phrase that I have added in there is the gross margin, and that's typically the percentage of sales of your gross profit, right? The reason that I threw that in there is because we typically like to look at percentages because what happens is most lenders will look at trends, and then additionally, they'll also use benchmark numbers within the industry to compare you to other businesses, right? So they'll typically look at the margins as opposed to the actual numbers, just so that they can do a comparison between you and another business or what's trending out there as an industry. So, all right, so the next section of an income statement is typically like your operating expenses. That's going to include your marketing, your rent, supplies. And then here we've also added some depreciation expenses, operating earnings, interest expenses, and taxes, right? So after everything is said and done, we then take the gross profit of the $3 million and then subtract the expenses, and that leads us with the net income or profit of $718,200. Now, again, if we talk about, oops, sorry about that. If we talk about the net margin, right, this ends up being about 7% for the business. So there you go. So again, we use that number a lot too in comparisons to a company to another company, right? Or if, you know, a lender just wants to see how it's doing against industry standards. All right, so how should you use this income statement then again, right? What you want to do with this is identify some key revenue drivers so that you know the business is still making a profit. And also too, did this business make a profit in and of itself, right? And here it is, it's showing that it did. So, and just as another refresher, what do businesses do with profits? Profits can either be distributed to the owners and shareholders of the company, often in the form of a dividend payment, or, you know, most of the time the business is going to reinvest that money back into the company. Profits might also be used to purchase new inventory, projects for a business, finance research and development, or maybe, you know, come up with some new products and services. So something to remember for the next slide, which is another phrase, retained earnings. This is the money, again, not paid to the shareholders. All right, so next financial statement that we have is your balance sheet. This is an overview, again, of the business's assets. This is your total liabilities plus the equity. And the balance statement is typically a snapshot of the business on a given date, most likely at the end of the year. But for me, when it comes to reviewing a balance sheet for startups, I kind of sometimes would recommend doing like a quarterly review, because then you can actually see what the growth is for the business. So in startups, just so everybody knows, for most lenders, is going to be businesses that are between 1 to 2 years in business. Usually after you reach the 2-year mark, that's when you're actually considered established. So really quick overview of this simple balance sheet. We've got the business's assets. They have cash of $28,000. Now this number is actually going to flow from the cash flow statement. So kind of remember that for down the road. Inventory, they have 72,000 of inventory. So for this particular business, their total assets are $100,000. And then their liabilities, which are loans, and this could be a loan, it could be your idle loan that you might have taken out because of the pandemic. It could be some unforgiven amounts for the PPP, right? Hopefully most of you had your PPP forgiven, but if you haven't and there was some money that was unforgiven, you'd want to include that in there. And then, any additional SBA loans or a bank loan that you might have, that would be included as your liability. Additionally, part of your liabilities is going to be your accounts payable. So for this business, it was the $9,000. So for the total liabilities is $40,000. The other thing that you're going to see on a balance sheet is typically the equity of the business, and in this example, it's $60,000. So again, when we talk about some other things that might pop up on here, I mentioned earlier some retained earnings. You might actually see this on here as well. Again, that's going to flow from the income statement. See how they all connect? All right, and just like the slide states, you should use the balance sheet to keep your assets and liabilities within proper limits and proportions of each other, right? So, a bank will also evaluate what's going on in the balance sheet too, to see that there's proper proportions going on there too. All right, so next up is the cash flow statement. To me, this is one of the most important financial statements that you need to be reviewing at all times, right? So the other statements you can do at different times of the year, but for me, the cash flow is something that needs to be reviewed at all times. At the very least, you want to at least do this when you budget or at the beginning of each month. And you need to be really proactive about managing your cash flow, right? Again, be proactive about managing your cash flow, right? So what can you learn from your cash flow statement? So cash flow is going to provide information about cash receipts, cash payments, and sales, and the net change in cash resulting from any operating and investing transactions. So it's a really simple formula. You subtract what you paid, like your bills, from the cash you brought in, which is your sales. So again, let's use this example here, right? So we've got a February cash flow statement for this business. They started the month with $800 in cash, and this is actual cash, everyone. So they brought in additionally cash in sales of $18,500, and then they were able to collect the receivables, which totaled $10,250, and then lucky them, they got an SBA loan of $16,000, right, in the month of February. So with that said, their total cash in was $45,550. Now, their cash out, it starts with the payment of payables. It could be payroll, supplies, rent, so forth and so on. That totaled $25,275. Now, they also were able to purchase a used moving truck this month, and that equaled $19,900. So again, going back to that simple math formula, we're going to take the $45,550 from cash in and subtract the cash out of $45,175, and that left them with a net cash flow of $375 at the end of the month. So even though they made this big purchase, they were still cash positive, and that's fantastic. So again, this cash flow statement, it's a valuable measure of strength, profitability, and the long-term future outlook for a company. It's basically telling you, was this business able to grow, which it kind of did because they were able to buy a truck, and were they able to pay their expenses, which looks like they did too, because they ended up with $375 at the end. Now, I love this quote here by Sir Richard Branson: never take your eyes off the cash flow because it's the lifeblood of a business. And I really do believe in that myself. I think that is actually one of the key things to surviving and thriving during this pandemic and then moving forward. I just want to go into a little bit of why does it matter, right? So Why does it matter? Let's take a look at that first box here. A business can be profitable and still run out of cash. Why is that, right? Well, let's do a quick refresher again. Profitability indicates the amount of money left over after operating expenses. But here's the thing, everybody. Some of that revenue, when you're reporting it on your income, that could be, or even on your balance sheets, right? It's tied up in receivables potentially too, right? It's not actual physical cash that a business has yet to pay the bills. So a business needs to generate enough cash from its activities, and that's actual cash, so that it can meet its expenses, to keep its lights on, like I was saying earlier, and have enough left over to repay investors and grow the business, right? Which leads us to that second box. Knowing how much cash you have is going to help you, again, understand if you can pay your immediate bills or your payables on time. It's going to let you know if you can afford new equipment, especially for, we do counseling sessions at the WBDC, and sometimes what I hear is like, oh, I know that piece of equipment is going to break down, or I know I need to buy something new to keep going, right? Your cash flow is going to be able to tell you if you can afford that new equipment. And then it's also going to tell you whether you can pay off your debt, right? So in other words, cash flow represents a business's ability to meet financial obligations, your payables and debt, and a business is cash flow positive if the sources of cash exceed the uses of cash, right? To me, all this really boils down to is capacity, right? Capacity to pay your bills, capacity to pay your employees, capacity to pay that rent that you have in the building that you're housed in, right? It's also capacity to maybe, if you're in a good financial position, to take on new projects and to take on, additional debt to grow the business. So by generating enough cash, a business can meet its everyday business needs and avoid taking on debt, right? And that can be done either, lender debt or even equity debt. And that's, having an investor. And the reason I bring that up too is because when you do have other debts or equity debt that you have, you end up kind of losing control over some of the activities of the business, right? So if you do have a loan, for instance, through the bank, you're going to have to report to them and pay that loan off, and they'll typically want to check in with you and see that you're doing okay as a business. And then if you have an investor, money from an investor, you typically have to report to them on a quarterly, maybe even a monthly basis, right? So you as a business owner are then losing control over or autonomy over what you want to do with the business all on your own. So that's why I say, if you can avoid taking on more debt, then go for it. But the best way to know that is to work out your cash flow numbers. The other thing I want to mention too is that last bullet over here where it says whether you can pay off your debt, right? This is, again, where a lot of banks are going to review whether or not a business can actually take on more debt or more capacity, right, for potentially new debt. So again, you really want to understand your cash flow, and you really want to know your numbers so that you can speak to them and let the banker know, or the lending institution know, yes, I can take on more debt and I will be able to pay you back. All right, so this is just a quick case study that I wanted to go over with everybody. What do you guys notice about this business, right? It looks like same thing here. They got an SBA loan. They look like they ended the month positive cash flow, right? And just to remind everybody, that number there, it's cash, it's not profit. But they did end the month positive, right? But when we really take a deeper dive into this, this is their cash in and then the loan that they received. So when you actually take a look at this example here, you can see that potentially the business really would not have been able to purchase that truck here at the bottom without that loan, right? It kind of left them pretty slim in terms of being barely cash positive, which what we want to point out here is that that's not a sustainable way to run a business. You always want to end the month positive, obviously, but give yourself enough of a cushion so that it's, you can sustain a longer period of time. All right, so how do you create positive cash flow? Well, just to remind everybody too, we are going to share the deck with everybody, but these are just some ideas and concepts that you can think about when trying to create positive cash flow. But one of the things that I always kind of remind people about is expenses are very important here. You want to review your previous months and take a look at ongoing costs that you see trending for yourself. You want to maybe record some of your startup costs, because some of those costs might actually be repeating recurring costs. And then when you're taking a look at your cash flow, can you add any new inventory or services to bring in better revenue or higher revenue, right? Other questions you might want to ask yourself too when you're evaluating cash flow is, what happens when you're paid late, right? Like, money's short for everybody right now, right? So what if you have clients that are paying you slow or paying you late, right? How does that impact your cash flow? What happens if inventory isn't delivered on time, right? I feel like everybody felt that crunch last year, right? Where packages weren't being delivered on time. For me, my postal service was even slow. They only delivered on a few days, right? So same thing has to be kind of taken into consideration when running your business and the cash flow. The other thing too is, what if an opportunity comes up for you? That's the other great thing that happened last year, actually. We were seeing actually a lot of businesses thriving in other areas, right? So projects could come up that were unexpected. Do you have the money to fund that, right? Because you typically have to have that capacity first before you can take on a new project. Or for those of you that are a sales-focused business and you have a sales rep out there, right? What if that person gets sick? Or what if you're the main salesperson and you get sick? Like, what happens to that cash flow? And then this is probably a crunch everybody's feeling, but what happens if your landlord increases your lease, right? You want to think about all of that when creating a positive cash flow projection. All right, so flow and growth. A healthy business is both profitable, cash positive, and manages to keep growth at a steady pace, right? Profit and cash flow warning signs. So these are two things here that are early warning signs for a business to kind of keep in mind when reviewing cash flow, right? So if you're profitable but don't have enough cash, what does that mean? What's kind of going on underneath, right? Potentially what's happening here is that maybe you're not collecting quickly enough from customers, or perhaps you're paying your suppliers too quickly, right? So evaluate your cash flow for that. Maybe you can collect a little bit more from your customers up front, right? So that you've got that increased cash flow. Maybe you can talk to your banker about setting up automated receivables or direct deposits and things like that from your clients, so that you can have them put into your account at a more timely, consistent basis, right? Or maybe you're just or maybe you can work out some contract negotiations with your vendors so that you can pay them a little bit slower, or maybe get a discounted price for some materials, so forth and so on, right? You just take a look at that. The other thing that you maybe want to be able to take a look at is if you have cash but are not profitable. So I feel like a lot of people may have run into this last year because they did take on some new debt, either through PPP or the EIDL, like I mentioned earlier. So if you have cash but are not profitable, that again, more than likely means that you've got some influx of cash. And the other part of it too is you could have also sold something too, and that also is an indication of cash flow, right? But again, this is not sustainable. It's not really profit, right? You just got an injection of cash there. So I want to spend a little bit of time on this point here too. When a business, when I would do some counseling for some clients last year, a lot of clients were actually asking, do I really need to take out a PPP or an EIDL or do any of those other government programs. And I would always ask them, well, have you evaluated your cash flow, right? And that was something that they always thought about. But that's kind of what I would use as a tool to evaluate whether or not you do need that cash, right? Because that's nice to get that nice influx of cash in, but at the same time too, you're going to have to take that cash and have it sustain for you for the next few months or so. So going to that last section there, it is very important to generate cash flow that grows and is sustainable over time. To assess if your metrics are sufficient, you must compare them to your projections and needs, so budget to actual, your competitors and industry standards, so benchmarking, there's that phrase again. And then additionally, you want to take a look at some trending, so historics, right? So look at your cash flow from previous months and years, and then use that to again measure and manage, right? So how do you actually create a cash flow? So first thing I always tell clients is gather all your receipts and costs, and then you want to create a spreadsheet. Now, how detailed is it's going to be? That's really up to you. But to me, I think the more detailed you make it, the better you'll be able to measure and manage. There's that phrase again, right? And some of the things you want to think about too is, the reason I say detailed is because it can even go as fine-tuned as adding like a line on your cash flow for PPE equipment, right? I think that's something that everybody here probably will have to include into their cash flow, because some people don't think about that as being a real big expense. But after you create that spreadsheet, you're going to plug in your numbers, and then you're going to assess. Are there any months that were negative? Were there any months that you had a really high net cash flow, right, over other months? And why was that? These are the things to think about when evaluating your cash. All right, and then the other thing to think about too is keeping your books in order. There's so many programs that are going on out there. You're going to want to keep your books in order, especially because for some of them, they are going to be situations where you may get audited. So here are some recommendations for you for accounting software and cloudware. This is going to help you automate your bill paying, your payroll processing, financial report generation. And I would also check in too with your banks to see if they might have some free services for you that are already included with your bank account, which I hope you all have. And then the other thing too is finance expertise, right? We always say ask a professional. Like you don't want to miss out on tax advantages because you think you can just do it yourself, right? There are times, and I feel like these are the times to do it. Seek out an accountant or a bookkeeper, right? They can help you. Find a trusted partner. And there are some places too where you can get some free consultation too. So take a look into that. But definitely now is the time to get some financial expertise. All right. So really quickly, we're going to touch on the American Rescue Plan programs that are out there. Now, we do have our panel here today too, so I want to remind everybody, you'll get the slides and you'll get a toolkit and et cetera with all of this information. But if you have any particular questions that you'd like to ask our panel, we do definitely have a great panel to ask. So go ahead and put those in the Q&A. But just to start out with the American Rescue Plan, we have these 4 programs here. There's the Shuttered Venue Operators Grant. This is for live venues, theaters, live arts, museum operations, and talent representatives. This is from the SBA, so you'll go to them directly. We also have the Restaurant Revitalization Grant. This is, again, a new program, direct grant support for restaurants that have been hit the hardest by the pandemic, also from the SBA. And then we also still have the new round of Paycheck Protection Program, the PPP. This is the forgivable loan to predominantly cover payroll costs to keep employees. And this is going to be provided by your financial institution, or there are some fintech companies like Womply and PayPal and all of those that are also providing that service as well. And then we still have the Economic Injury Disaster Loan, or the EIDL, that's still available. Again, going back to what I had said earlier, because so many businesses weren't actually prepared to take on all of these new programs, there was still actually a lot of money left on the table. So there is still plenty of money in the EIDL program available. This loan provides economic relief to small businesses and nonprofit organizations that are currently experiencing a temporary loss. And again, this one is through the SBA again. All right, so this is just a really nice breakdown of the restaurant revitalization grant. It was signed on March 11th. The application is not quite live yet. The SBA is still developing the application along with the program. So definitely keep one or two resources. You know, I always say for clients to log into or to check, you know, 1 to 2 resources daily or every other day to kind of check on the programs that are live and up and running. So the SBA site is definitely a really good resource to do, to check there. So again, this is a direct grant for restaurants, and the grant amounts are up to $10 million per restaurant or $5 million per individual group. All right, and so who is eligible? So this is for all food service or drinking establishments, including restaurants, food trucks, tap rooms, tasting rooms, caterers, crew pubs, food stands. And these are for incurred eligible expenses between 2/15 of 2020 to this year, 12/31/2021. And then who is not eligible? If you are part of an affiliated group with more than 20 locations, regardless of whether those locations do business under the same or multiple names, if you are publicly traded, if you have a pending application under the Save Our Stages program, and if you are a business operated by state or local government. So the next grant program is the Shuttered Venue Operators Grant. Now, just so everybody knows, here is the link for it. The application did open up on the 8th. However, the SBA is, as of this morning, still having some technical difficulties with the site. So keep checking on it again, just to ensure that you know, you don't miss out on the opportunity. But what is this for? This is providing grants equal to 45% of a business's gross earned revenue. Again, there's the link for it, and you know, continuously check that to see when that's available. And there's going to be 3 priority rounds here. The first 14 days will open for entities that suffered a 90% or greater revenue loss. The next 14 days will then be focused on businesses that are at a 70% or greater revenue loss. And then the last one is going to be for 25%. Who's eligible here? So you must have been in operations as of February 29th, 2020. Eligible entities include live venue operators or promoters, theatrical producers, live performing arts or organization operators, relevant museum operators, zoos and aquariums, motion picture theater operators, and talent representatives. Eligible expenses for the funds can be payroll costs, rent payments, utility payments, worker protection expenses, payments to contractors, administrative costs, taxes and fees, and then other ordinary and necessary business expenses. And then PPP and EIDL updates. So updates to the PPP, I think everybody's aware that there were changes through the Biden administration. The extension has been set to May 31st. So please, 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 if you haven't done it, go and apply. The other thing that was changed on there was the sole proprietors calculation. They no longer were using the net income of a sole proprietor and the Schedule C, but they are looking actually at the gross income. Now, the reason I have the check with your lender on here is because before, if you are a sole prop, or a single member LLC with the Schedule C, I want you to check with your lender prior to applying, because some lenders out there, unfortunately, were not able to comply with that new policy change. And so they're still looking at the net income on your Schedule C as the determination for how much you can receive, right? So ask your lender before applying. And then, if they're not doing it, there are other lenders that are out there that are using the gross income. So definitely check on that before you apply. And then you don't forget to apply for the forgiveness piece of it too. All right, and so EIDL, again, that's just a quick update for the EIDL. Provides loans with 24 months of an economic injury with a max loan amount of $500,000. With this one too, I want everybody to remember that there's typically, if you do a loan over 50 or 25,000, the SBA will put a lien on your business, so don't forget about that. Deferment period is now a total of 24 months. Deadline extended to December of 2021, and targeted EIDL advances. These are grants again, and this is going to be a proactive task by the SBA. They're going to reach out to businesses who are applying for that. And it's going to be mostly focused in LMI areas. All right, so as we are kind of wrapping up here on my portion of today's programming, steps to take, right? So again, these are some steps that we'd really love all of you to take to survive and thrive during these times. And also know that there's a lot of support out there, right? You can visit the Cook County smallbusiness.org site to receive updated information. Like I said, pick one or two resources to do that. This one is a really great one to have. Review our business support organization directory. There are so many free services out there, everyone, that you can go to for some guidance. So please, definitely take a look at that directory and seek us out. Sign up for one-on-one business advisory sessions, like I mentioned, and then sign up for the notifications so that you know what's going on currently out there. And then really quick too, you'll get the toolkit for this event. It's going to include financial statement templates, information about American Rescue Plan, and then tools and accounting resources. And then you'll also get the recording of the PowerPoint. So, all right. So now we get to our wonderful Survive and Thrive panel, and I am so happy to introduce our lovely MC, Lotika Pai. She is the Managing Director for Access to Capital at the WBDC, and we also have our wonderful William McIntosh from Chicago Trend, Val Arnold from Arnold Knox, LLC, Matt Quinn from the Illinois Restaurant Association, and I'm going to let them take it away for a really great session here.
It's wonderful. Thank you. Good afternoon, everyone. My name is Lotika Pai, and I'm the Managing Director of Access to Capital at the Women's Business Development Center. And we're really proud to be such an integral part of small business ecosystem in Illinois. Abby, thank you so much for the incredibly informative presentation. We all know that small business owners are really resistant and are used to dealing with the unexpected, but many have never been through a crisis like this pandemic before. And I'm a firm believer that to get your share of the help, you need to be aware of the resources that are available to you. Since we have such a wonderfully diverse and experienced panel, I'm hoping that we can have a wonderful conversation around topics that are top of mind and relevant for small businesses right now. We have a really great panel, and although we have their bios and we always know there's more to the story. So I would love to go around and have the panelists introduce themselves, and please share a little bit more about yourself, your area of specialty, and where you are now. And just as a housekeeping rule, if everyone could submit their questions through the Q&A tab, that would be really helpful. And we've set aside 10 minutes after to answer everyone's questions. To kick off the introductions, Matt, who is the Assistant Director of Government Relations and Communications with the Illinois Restaurant Association. Matt?
Thanks, Lotika. I appreciate the opportunity to speak with everyone today. So I've been with the IRA for the past 7 years, and I help lead all of our advocacy efforts with local, state, and federal officials and direct our communication strategies with our members, the media, and the public. So the IRA represents all facets of the food service industry. So restaurants, bars, caterers, event venues, breweries, food trucks, all of our allied vendors, and really everyone in between. Pre-COVID, our industry was the largest private sector employer in the state, with 594,000 people employed at over 24,000 eating and drinking establishments across the state. But as you know, it will be a very long road to recovery, as 124,000 food service jobs were lost in our industry from February last year to February this year. We were the first to shut down, and in all likelihood will really be the last to fully reopen and recover. Since COVID began, my team and I have really been focused 100% on providing supports, relief, and advocacy to restaurant operators around the state. It's really been a constant struggle to, for restaurants to keep restaurants open safely and to secure pragmatic reopening regulations. But it's our job to be at the table with elected officials and public health experts to really get the most favorable regulations possible that keep everyone safe and keep public health, a top priority. At the local and state levels, we've been working to cut licensing fees, streamline and expand outdoor dining options, cap fees that delivery services can charge onto restaurants, pass cocktails to go legislation, and other provisions that help the industry. Nationally, our industry secured a huge win with the passage of the $28 billion Restaurant Revitalization Fund. We've been working over the past year with our partners at the National Restaurant Association and folks around the country to get Congress to pass that really urgently needed dedicated relief. So we're excited that application is going to be made live by SBA very soon. There's a really helpful and thorough FAQ that you'll all be receiving after the presentation that was put together by our colleagues at the National Restaurant Association. So a lot of great information there that'll help answer a lot of questions and the best answers that we have right now for the program. Some other forms of support the IRA has been offering is that through our educational foundation, we created our Employee Relief Fund, which has given out more than $250,000 in $500 grants to more than 500 recipients since last fall. We've also created pro bono consultant networks of attorneys and dining design networks, as well as a resource database of vendors that can help restaurants reopen. And we're doing bi-weekly webinars with the Cook County Community Recovery Initiative that provide expert advice on things like generating new revenue, mental health supports, marketing strategies, increasing off-premise sales, real estate concerns, and a lot more. So those are some of the things we're working on. We're here as a resource to the restaurant and hospitality industry 24/7. So please feel free to reach out to myself, anyone on the IRA team anytime, if you have any questions or are in need of technical assistance or business advising. So thanks for having me today. Looking forward to our conversation.
Thank you, Matt. And next we have Val Arnold. She's the Chief Financial Officer of Arnold Knox. Val?
Hi, good day. My name is Val Arnold, and as it was shared, I am a business owner, sole proprietor of Arnold Knox LLC. I'm a certified public accountant, and currently I work with small businesses and focus on helping those businesses with accounting as well as tax preparation needs. Additionally, I do audits for government municipalities, smaller municipalities, as well as serve in audits with non-for-profits. Prior to becoming a small business owner or sole proprietor or entrepreneur, I worked with McDonald's Corporation for 15 years. I was in the corporate side, I was in operations. So definitely understand the restaurant business very entrenchedly, because that was my first job after I matriculated and graduated from college, and serviced over 15 restaurants as Operation Territory Manager. My area stretched all the way from about Bloomington, Illinois, all the way down into Indiana. So very strong advocate of small business and understanding just from an operational standpoint what you need to do. And now my purpose and calling as a certified public accountant is to make sure that I am a supporting hand to help businesses be able to fulfill their passion and their calling. That's the way that we describe our company at Arnold Knox. So thank you so very much for having me on this panel. I look forward to having a great conversation with Will and Matt.
Thank you, Val. And finally, we have Will McIntosh in Small Business Services at the Chicago Trend Corporation. Will.
Thanks, Lotica. Good morning, everyone. I'm Will McIntosh. As Lotica mentioned, I work with Chicago Trend as the Director of Real Estate, Finance, and Small Business Services. My background in terms of the industry, I was traditionally a lender working for PNC Bank prior to joining this organization for about 7 years. I was working within the commercial lending space with businesses that are presumably between 5 and 100 million in revenue. So essentially, these are businesses that were small at some point, but typically transitioned to a point as the business grew to kind of take on more employee size, slightly. It's considered small businesses, but a little bit larger in space for that middle market space. So anything from pretty much managing banking relationships for these corporate clients, as well as lending relationships for them. And since then, I joined Chicago Trend in November of 2020, actually, so fairly recently. And I joined the organization to help join in on the mission of the organization, which Chicago Trend is in. It's been around since 2016, and we're in the focus of serving as a conduit as well as a strategic resource for many small businesses within the Chicagoland and urban areas in several different cities. And what we aim to do is support, from a strategic perspective, retail and real estate development within these communities that will help transform them, as well as we connect small business owners and entrepreneurs with our industry and market resources, as well as our philanthropic partners to help invest into projects that will help build out these communities, as well as promote generational wealth and minority ownership for the individuals that live in those communities to help create more ownership amongst those. So I'm coming here with the perspectives today of not only what we are seeing in our realm of real estate, but also from a lending perspective as you look to apply for certain grants, as well as go for funding to help with your business, knowing when it's the right time, as well as partnering with the two other presenters today to kind of field any questions around when's the right time and just the progression of business as you look to survive and thrive in this environment. So with that, I'll hand it over.
Thank you, Will. As you can see, we have such a wonderfully diverse panel. So let's dig right into it. And Matt, we'll kick off the questions with you. So you obviously have a very deep experience in the industry, and the restaurant revitalization grant is continuing to stir up questions, and it's nearing towards its anticipated rollout. But there's a lot of uncertainty around the application process and all of that. So the Rescue Act included, $28.6 billion into the grant program. And the goal is really to aid restaurants still struggling with a year plus of fallout of COVID-19. So as the SBA is setting a target date, initially they set it in April and to begin taking applications, but the exact date is still a little bit unclear right now. What guidance can you provide to businesses so that they can start preparing for when the application opens up? Because it's going to be a deluge of applications as soon as the portal opens up. So what can they do right now?
Yeah, absolutely. That's a great question, Latka, and certainly, one that's on everyone's mind. So we do expect an informational website and program guide to be made available by SBA within the next week or so. We also expect the official application to be posted at the same time as well. In the meantime, the National Restaurant Association has put together a really excellent FAQ document 35, 36 questions and answers that, and insights into the Restaurant Revitalization Fund grant program. So this is going to be sent along to registrants after the webinar. It's also available on the IRA website at IllinoisRestaurants.org. We also had a draft unofficial RRF application that hasn't been publicly released by SBA. For restaurateurs to be able to reference. That's available on the IRA website as well in our latest news section. So that should help to inform operators about what will be needed in the application materials. In terms of documents you may need, the application form and then IRS form 4506T, as well as gross receipts documentation. So I'll give a few examples based on when you were in business. So applicants in operation before January 1st, 2019 have to supply gross receipts for 2019 and 2020. Applicants in operation through part of 2019 must supply gross receipts for 2019 and 2020. Those applicants that began operations on or between January 1st, 2020 and March 10th, 2021, and applicants that haven't yet opened as of March 11th, 2021, but have incurred eligible expenses, must supply documentation of those gross receipts and eligible expenses for the length of time in operation. I know I'm going through a lot here, but it's going to be much easier to read through on paper when we send it out to you after the webinar. Some documents to be able to prove your gross receipts are things like your business tax returns, so your IRS Form 1120 and IRS 1120S, your IRS Forms 1040 Schedule C and IRS Forms 1040 Schedule F. For a partnership's IRS Form 1065, including K1s, bank statements, externally or internally prepared financial statements like income statements and profit and loss statements, similar to what we were discussing earlier in the presentation, and then point of sale reports, including IRS Form 1099K. So those are some things to start to prepare now. We know that you no longer need a DUNS number or need to register with sam.gov in order to apply. RRF applications are going to run on a new government platform. Hopefully it will streamline the process for everyone involved, so there won't be any issues like we've seen with the shuttered grants, shuttered venue grant program. A couple other things, we know the SBA may create a minimum grant amount of $1,000 for eligible entities. The maximum grant amount, as we touched on before, is $5 million per location and $10 million total for an eligible entity. But we know that the $28 billion is going to go relatively quickly. So we're currently working on a plan to replenish that program through Congress. So, still several question marks throughout, but we're frequently updating our network with the latest information. So you can register, sign up for updates with the IRA on our website, and get the latest info there.
Thank you, Matt, so much. So I think everything you said really underscored what Abby mentioned in her presentation, that documentation is so important.
Absolutely.
And the fact that, this is the time in American history where right now grants are the cheapest form of capital. It's the lowest form of capital that is available to small business owners, but you have to be ready to absorb this capital. So access to capital is not an issue, but absorption of that capital and being ready with your documentation to get it is really, really important. So, thank you so much for sharing that information. It was incredibly informative. So moving on to you, Val, you bring some very unique insights to the table. You're a CPA, you've been working with small business owners for the entirety of your career. You focus on tax management, accounting, advisory services. This is a time when small business owners are particularly vulnerable. They have declining revenues along with the need to pivot and innovate and all the stuff that they need to spend money on to get back to pre-pandemic levels of productivity. And at the core of all of that is the need for good financial and cash flow management. Abby covered that at a higher level, but how can small businesses really tap into their CPAs, their tax advisors more, and have them become what I would call a part of their overall support system, and rather, than just using them once a year for year-end tax purposes, which is what a lot of small business owners do. So it'd be wonderful to hear your thoughts on that.
So thank you so very much. I think it's important for small business and owners to understand that a accountant or CPA as I am, is a relationship, and it should be an ongoing relationship. And one of the things is a lot of times small business, they'll come in at the end of the year and say, here's all my tax information, and prepare my tax return. And then there may be a situation where they may have a tax liability. Well, if they would have been in relationship and dialogue and conversation throughout the entire year, there may have been some tax strategies, or there may have been some information that could have come forth to help them mitigate that potential tax liability. Also, one of the things when you're having this relationship, and I say it's a relationship, ongoing conversation and dialogue with a CPA, like what I do with my clients, we have quarterly conversations looking at your key performance indicators. What are you trying to achieve? What are your goals? And how can I be a support to help you meet those goals? And so it's really to understand that when you source a professional, a CPA, or I'm going to say a really versed accountant that understands really strong bookkeeping relationships, that you understand that you're going into a long-term relationship with that's the other thing. You have to find the person that can care, that has compassion, that understands your particular business, and will not be afraid to tell you the no. So before I take on a client, I ask them, how comfortable are you with the word no? And the reason why I ask that is because there are some things that I want them to understand would not be good for the business, or would not be good for the business decision, but understanding that I'm doing it in a way that is caring, and I want to make sure that their business thrives and it continues. And so it's really looking at that and saying, okay, build that relationship with your CPA. You should be looking at your financials on at least a quarterly basis, all of the financials, the balance sheet, the income statement, the statement of cash flows every month, but definitely your balance sheet, your income statement. What is that saying? It's a language. It's a love language. It's a financial love language, and it's your business. Is it me?
I think you were cutting off a little bit. Can
Okay.
everyone hear her?
Can you hear me now?
Yes.
Okay. So again, what I was saying is it's a love language, and it's your business love language. And so just know to have a relationship, and then there are tools out there that can help you. Use those database tools that were mentioned in the presentation, but those are only tools. You still are going to need someone that is versed in that information, understanding the relationship between a debit and a credit, understanding how to help you dissect the balance sheet, that when you go in front of a lender, you can tell your story. So before, the story was based on past performance. Well, with COVID, we know that past performance has caused not the story that everyone had because of history, the pandemic. Now you have to take that past and you have to create a sunshine future. What does that look like? That's what the lender wants to see. That's what the grant writers wants to see. That's what the investors want to hear and see. So you have to create that rainbow in the sky that everybody can see, that it's going to be a brighter day.
Yeah, well, thank you. I have never quite heard business statements being referred to as, financial statements is what the business love language. They're usually considered very dull, dry, and boring. But, I totally understand where you're coming from because, again, going back to the very first slide in the presentation when Abby was talking about the importance of the financial statements is if you cannot measure it, you cannot track it. And that's the core underlying principle of the basic need that every business owner should fulfill is understand what the numbers are telling you. Because if you're not measuring it, you are not tracking it. And if you're not tracking it, you're not making informed decisions. So it's really, really important. And thank you, Val, for adding to my vocabulary today. I kind of will, accessing capital is such an important issue for small business owners right now, whether it's through grants or loans. And right now with declining revenues, impacted credit scores, all of this has contributed to a small business owner's reduced ability to access debt from traditional financial institutions. And, we all know this pandemic has been a significant disruptor. And what we are going to see is for true recovery to happen in the near to medium term, folks are, all entrepreneurs and small business owners are going to need access to non-disaster financing. So in your view, you've been a banker before, what do you think are the changes that you anticipate happening in the lending space because of COVID? And what accommodations are you already aware of that have been made? And how should small business owners really prepare themselves to access all these variety of funding sources that are available to them?
Got it. No, that's a great question and something to put in perspective. So first, I'll say you have to think about it from both the lender and the small business perspective. After going through COVID, how is this set up both sides? So from the lender's perspective, things were tightened. If anything, it was somewhat of a same reaction of what they went through in the first recession a few years ago, in terms of you had the processes in place, and it was to test those processes to see that how well we can weather the storm. Can we tighten it enough? Are we doing fair lending practices? Are we setting ourselves up from a capacity standpoint that we're able to service these businesses? In light of that, lenders are looking at the situations that we can't do a lot of long-term lending, or we have to tighten up on those long-term lending, and we have to be more stringent in terms of the opportunities that we are looking at in terms of the cash being there and just the business being set up, being able to reduce the amount of risk on loans that could fail. Understanding that the environment is not a favorable one for the small business, but also trying to find new ways to help or pad or strengthen the relationship with the small business. At the same time, it gave lenders the chance to look at their current systems and say, how are our digital offerings for it? How are we making the process easier? How can we prevent disaster or prevent the troubles that are being shown now within this environment in the future, as we don't know what the next pandemic or the next hardship is going to be. It's causing lenders to really look at their processes and look at their relationships and just review and see how are we going to move forward after this. From a small business perspective, you're taking on a loss. You're taking on some type of impact that is putting a highlight on areas where that you were maybe soft in from. Maybe it's statement reporting. Maybe it's having that cushion for when a disaster happens that you could go to once your activity reduced, once your business line doesn't seem like the most profitable or the popular business line anymore. So it's pretty much businesses and lenders are looking at it from a standpoint of evaluating it. These times calls those lenders to take a step back and see how are they positioned. Moving forward, if we're talking towards debt funding in the future, activity is going to get better. We're going to come out of this pandemic, and it's a light that you lick your wounds and you see what has impacted your business and see how can you move forward from there. The SBA has done a lot in terms of providing relief, not only in disaster funds, but also relief on its current programs in terms of deferral on payments and just lower interest rates on their current lending, including the 504 program. But I would also submit that institutional lenders are looking to do the same, that as things turn, how are we looking at businesses? How are we looking at different industries, given the environment and what it reflected during this environment? Like looking at the retail segment, that's always been a conversation of that. How much can we trust retail when we've been in a pandemic and a lot of the office spaces, a lot of the downtown office spaces are transitioning from a standpoint highlighting that they've been able to work with remote capabilities. And that drives away from a restaurant perspective, your traffic coming into your restaurant too. So looking at the industries that are affected, how do you lend to them on a long-term basis or even a short-term basis, basically with trends changing? So they're looking at capital sources that are going to make sense from a timing perspective. They're looking at capital resources where that there's some backing and input from the company, whether it's equity or like its performance of cash over time, which it just begs the result for small businesses to really be tight on their reporting, to really be tight in knowing how their business operates, the cycles, and being able to tell that story, as Val mentioned earlier, to the underwriters, to the loan managers. And I guess I can end on somewhat of an example in terms of what we've worked with from our end. So again, we're mainly within the industry of real estate and helping with real estate development, but also providing small business services in the form of advisory for businesses that are looking to expand their business into maybe larger spaces or to improve on their current spaces. Had the chance to work with a restaurant that basically served chicken. They were a retail restaurant and they were well known for the chicken that they serve. But once the pandemic hit, they saw some softness in their sales, but was still at a level where it was necessary. Like individuals have to find dinner at the end of the day. They would come and visit their shop, and they've built up enough of a presence that it was known in the community that they had a strong profit at the end of the day. They got to a point, or they're at a point where they're looking to expand their business into a new space because their current space is just too small for the level of capacity that they are witnessing for their business. And they're working with us in a sense to help position themselves and present themselves to a lender and to these programs and see how they should present from a financial standpoint or even from a story standpoint to make a better case for them to receive funds from these operators and lenders. But the issues that we ran into is that their bookkeeping was pretty much they're taking cash receipts from the registers and keeping track of expenses individually, and they don't really have formal statements. Not even internally company prepare statements, what could be done within QuickBooks or just outline of that. And it was really just the nature of that. This was how they started and how they got used to running their business, and they had the resources but never really spent the time to do so. So it's made it a little bit difficult for the owner to kind of create a presentation that the underwriter requested, who the underwriter wants to see how much cash is flowing through the business, and what he had didn't necessarily tell the real story. So we had to help the business owner realize, okay, what are your cash receipts coming in? What are your normal expenses? This is how you could potentially outline it. This is what the underwriter is looking for. And this is the story that we have to tell to him to position yourselves as to building the case as to why you need this larger space. And you're talking about a business that was doing a couple $100,000 in revenue, and they're making assumptions that they could essentially go to almost $1 million in revenue. So you have to have those questions of like, okay, how you're going to get there? What's your offering going to be? Like, will the space really garner that much? So asking those critical questions, all to build a case to make sure that you're lining up with the underwriter. And as I mentioned before, it proves the point of like you have enough cash flowing through the business, or will have enough cash flowing through the future business to help support your acts for this particular funding that you'll have to pay back. So long roundabout way to answer it, but I hope it helps in terms of providing an example. But long story short, lenders are looking to work with businesses and keeping more of a focus based on what they've witnessed in the pandemic of how they're able to move forward with different industries and different smaller businesses.
Yeah, no, thank you, Will. I think the other thing that your story highlighted for me was the importance of story credits, because when your recent past performance is not a reliable indicator for future growth, how are you presenting the story to the business bankers and lenders that are working with you? So thank you for sharing that. Mm-hmm. We are a little short on time, so I have like a final set of questions, and then I really do want to open it up for Q&A, which would, I think, be very beneficial for our audience. So, these questions are more focused on resources and toolkits that business owners can use right now. So Matt, for the restaurant revitalization grants, can you provide us with some quick insight on how the grant amounts are calculated and whether that grant amount is going to be reduced by the amount of the PPP loans or the idle loans, and also what resource can you direct small business owners to who do qualify for these grants? And I know you mentioned the FAQ list, and I think I'll link that later. So, Matt?
Sure. Yeah. So basically, it works like this for the Restaurant Revitalization Fund grant. So an entity can receive a tax-free federal grant equal to the amount of its pandemic-related revenue loss subtracted by the total amount it receives in all PPP loans. So the simplest example is this. For entities that opened before 2019, it's gross receipts of 2019 minus gross receipts of 2020 minus total amount of PPP loans, first draw and the second draw, would equal the amount it qualifies for a Restaurant Revitalization Fund grant. There's a few slightly different calculations for entities opened in 2019, 2020, or 2021, and those will be in the FAQ. A couple other things: PPP loans are deducted from eligible amounts for the Restaurant Revitalization Fund, but idle loans / grants are not. Additionally, employee retention tax credits do not count against the RRF grant amounts, but an entity is restricted from collecting ERTC, the employee retention tax credit, for any eligible wages paid with Restaurant Revitalization Fund grants. Basically, you can't double dip, use those funds for the same purposes. In terms of assistance with applying, I definitely recommend connecting with the Cook County Small Business Assistance team. Reach out to the IRA anytime. Also, all of the FAQs and other information that we're providing, it's set up to be as informative as possible, so that operators don't need to seek out the advice of certain, grant writers that might be approaching businesses saying, hey, if you pay me X amount, I can help you apply. Hopefully that it won't really be necessary because of the way that SBA is working to streamline the process and all the information that the IRA and Cook County will be putting out. But the resources guide that we're going to be sending out, that Cook County, that the team has put together, is going to have a lot of really helpful information in that as well.
Yeah, no, that's really helpful. So very quickly for you now, Val, while we're wrapping this up, is, we all understand the need for expert financial advice and guidance, but during these really challenging economic times where so many business owners that we work with have seen significant decline in revenues, many afford expert accountants and tax advisors. So what tools and resources can they use to better organize and track their business financials, expenses, cash flows? As we are all emerging from this pandemic, we need to know what we can use to help ourselves. So Val, your thoughts?
Sure. So a couple of things. Of course, I would definitely say find one of the platforms that was introduced, maybe QuickBooks Online, or I looked at a few. I use QuickBooks Online with a lot of my clients, but there are several, what I would say, relatively low cost platforms that can help you track data. But however, say you don't even have that. Excel. If you have Office on your computer, let's create an Excel sheet January, February, March, April, May, June, July, August, September, October, November, December, with those 12 columns, and just begin to start tracking how much revenues you get in, place some categories, rent, supplies. Even if you don't know if it falls in the bucket of office supplies or what kind of supplies, just put supplies, payroll, if you taxes, start there. And then also, if you have a relationship, and I just know I've had a person that called me recently and said, look, I'm trying to see if I want to get the PPP loan. I opened up my business and I didn't have any payroll. It was a sole prop, but I see that I have to get some payroll tax information. And can you help me with this? Just because he said he needed the help, I sat on the phone with him for an hour. I just gave it away. I said, you can do this. I'm encouraging you. I believe in you. So let's walk through it. So I think it's even just picking up the phone and taking the chance. And you may get that opportunity where you may have someone that just will, in this time, many practicing professionals are ready to help you and get you over the hump, because we know that in the future, you may potentially either come to that professional, or we're going to refer you out. We're going to refer you out to make sure you have support in the future. So just take a chance, but really basic, Excel sheet. It can be your friend.
Yeah, no, thank you. I think that's really helpful. And actually, there was a really interesting question that was posted in the Q&A, which is a really good segue into Will's final question that'll wrap up our webinar before we jump into Q&A, is what Sarah mentioned, Sarah Gregory. What is the difference between certified and non-certified financial documents, and what is the need to qualify, are they needed to qualify for existing grants and SBA loan products? So very quickly for everyone, a certified public accountant, when they audit the contents of your financial statements using GAAP accounting principles to ensure details are accurate, that once the audit is complete, the accountant certifies the statement. If you just have statements that are compiled in Excel sheets that you're using for internal purposes, whether they have been prepared by an accountant or just by yourself, and they have not been audited or certified, that's for you. I think the timeliness of compiled statements is important for internal operations for the company, but they haven't been certified by a CPA. But you don't really need, in my mind right now, none of the grant programs that we have looked at actually require certified financial documents. They do require you to submit your taxes. They do require you to submit your business license. They do want to see your bank statements. So I don't believe I've actually seen a grant that has been launched in the last 11 months that has asked for any certified financial documents. So, that brings us to really the final question, which is really important. And I think it kind of ties everything together. And I want to close out this conversation with Will. You've helped so many small business owners get access to various grants and loan programs. So can you please highlight for us the importance of maintaining these various documentations that are required and tracking your expenses? Because at the end of the day, even grants are taxable, So how does that play into being ready to not just access these loans and grants, but also ensuring that so many of these business owners that are accessing these funds right now are ready in case there's an audit and when they have to file their taxes, which will happen at some point. So, Will?
No, definitely. So let's say if you had a project that you were looking to either purchase like some equipment, or you were to even build out a space, or even if you needed working capital. The basis, again, for any lender or any funding sources to figure out the story and see if you'll have enough cash over time to be able to repay what they're lending out, and at the same time have enough cash flowing into your business. So to the conversation of uncertified versus certified, the certified information is usually required from the lenders towards the end of the process in terms of to be able to confirm the information that you've committed to them for the opportunities. What the uncertified information, which I would consider it's that Excel sheet that you're doing a 12-month view into your business or even a quarterly view, that helps the lender as well as us to get a picture of how we could tell a story and make approval decisions on that. Usually the case is that we use those uncertified information in the time that you don't necessarily have certified information at that time to help us make a decision and then require that certified information to confirm that. From our perspective, we typically ask individuals like if they have like internally prepared numbers, if they have an Excel sheet of numbers to give us just a picture to not only see what you've done historically, but also project out where you could be going and how it will help the project, and then create like pretty much a portfolio or a case to present to a lender that they could take that and help them make a decision. So the more information, the better. How it helps from an accounting standpoint, and Val can kind of contribute to this as well, is that if you're keeping that information over time, that helps the accountant to kind of also keep track and kind of certify the information as they're preparing your audits, your reviews, your compiled statements as well. So, and then you're also able to answer those questions too, that the accountant may have as they're preparing notes for it, or just getting an understanding to how to present that information, and also look at it from a tax perspective. So that's where the importance of the uncertified information and internally prepared information comes into play.
And that is incredibly helpful. So, this was such a wonderful conversation. I really want to thank all three of you, Matt, Will, Val, to taking the time to share your expertise with us. We have very little time left, but Carlos, do you have any, I can see that Abby and you have been answering a lot of the questions as they've been filtering through, but do we have any questions that you would like to address and moderate with the panel before we wrap this up?
Definitely. I know there's a question that you answered I think would be very great for people still to understand is the difference between net cash flow and net profit. I know that was a question I saw a few times. And I was wondering if you can just, quickly explain that, for everybody here on the call.
Yeah, I can, I'll take a crack at it, and Val, please chime in. I did answer it in the chat, but one of the things with cash flow management, which I think is incredibly important, is you can be a profitable small business enterprise, but if you run out of cash, you can actually go out of business. There's a significant number of small businesses that go out of business even though they are profitable because they run out of cash. And the difference here is that profit is an accounting measure. So when you calculate the profit, the net income or the net profit, the accounting measure actually includes non-cash expenses. So depreciation, amortization, all of these are non-cash expenses, which you are deducting from your revenue. So it's an accounting measure. Net cash, however, is what I call a true measure of a company's liquidity. So, what you're seeing what cash comes in, and you are netting out the cash that's going out to pay your obligations and liabilities. And what you end up with at the end of the period is net cash. And you never really want to have negative net cash, but it truly measures a small business's ability to meet its short-term financial obligations. Val?
Yes, you did a wonderful job. Just, I will say, cash is king.
Yes.
We're here today on this particular platform discussing cash and how to get you resources to be able to sustain your business. And I can even share a very personal story that just happened to me about why cash or the cash flow statement is very important and very essential. And this really literally happened to me yesterday. I had a very large receivable. I went and my money it's in a float state because it's dealing with the entity that has to have the monies approved by the board. Well, unfortunately, somehow my invoice didn't make it on this docket for board approval. So if I would have taken all the cash reserves or quite a bit of the cash reserves to pay some of the bills, even though I would have been showing a profit, it could have put me in a cash strap position or made me put me in some cash reserves. So, or having me in a place where I may not could have made wise decisions with future obligations or needs. So the whole thing with cash flow is your sources and uses of cash. And the biggest thing is timing. Timing. I want you to hold on to that word, timing. I need cash, and the thing is, it's really finding that sweet spot with timing. So where I was anticipating getting this money yesterday, literally, I am now kicked out 30 days later. So I have enough cash reserves and, you know, things to sustain and keep my business operations afloat and all of that. But that is why it's important, because what if I did not? How would I pay my staff? How would I pay my rent? How would I pay? And then going back to the story, we have to go in front of Will and we have to begin to color the story to say, wait, no, I'm profitable. It was just this 1 month or just this mishap. And here's the reason why. But you don't want that to happen quite often. So cash is king, cash is king, cash is king.
Yeah, no, absolutely, Val. And I think that also ties into the statement that both you and Will made earlier was, measuring your KPIs, your key performance indicators is so important, and understanding your financial statements helps you do that. So if you're tracking your accounts receivable turnovers, you kind of, like Val got aware of it in a timely fashion, that at the end of the day, this outstanding AR is an interest-free loan that she has given to the person who owes her the money. But being aware of these things as they happen and before they happen really help you track your expenses better and manage your small business in a much more efficient and financially prudent manner as well. Carlos, was there anything else?
And the last one is that I have here is just a question from Denise asking, what any other financial options for businesses that are maybe not in the live events or productions. Currently, she's not eligible for SVOG, but is wondering for other financial options she can consider. And that's something I think we can handle in the business advising session, but I don't know if there's potential.
Yeah. Denise, I'd be happy to have an offline conversation with you. We have had many organizations that have reached out to us regarding eligibility concerns for the SVOG grant, because it's for ticketed venues, and also if you're involved in promotion of live entertainment and production industries. So if you would like, we can help you a little bit analyze on whether or not you really truly are eligible with the SVOG. And in terms of if there are any other grants right now, I'm sure there'll be more coming down the pike because of the American Rescue Act, but it'll take time for Congress to kind of act on it, that money to filter through to the state governments, and then the various programs will be put in place. So as and when they become available, you can be rest assured that the Cook County team and the Next Street team and everyone here on this panel will, try our utmost to make sure that, everyone's aware of what's in the pipeline.
Thank you, Ludica. And I don't know if we have enough time, but a final question just came in about they want to prepare documentations for their restaurant grant, and they're wondering, what type of documents or where can they access this information to really just prep themselves for the restaurant grant.
Matt, do you want to take that?
Sure. So you're going to be getting a thorough FAQ doc coming your way after the presentation. But basically, some things that you can prepare are, your business tax returns, IRS forms 1040 Schedule C and Schedule F, any partner, your partnership IRS forms 1065 or K1s, bank statements, and then any internal income statements or profit and loss statements. And then your point of sale reports would be helpful as well. So just getting your books in order for when that application becomes available, hopefully within the next week or so. That'll all be helpful to have on hand.
Definitely. I appreciate it. And one final thing for all attendees just to know is that we'll send out, a bio for the panelists, as long as the websites for all their organizations and how to contact them, just in case you have other questions and want specific help. So again, thank you, panelists, for coming on board and really helping out and be able to provide all this insightful answers. We'll be able to provide a recording of this event along with the panel and the Q&As from all the questions that were answered here, along with all the resources that were mentioned, from all the SBA links that you need to apply, with all the financial statement templates, Excel templates that you can use to organize yourself. So again, I appreciate you all for joining, and a sincere thank you from the Cook County Small Business Assistance Program. All right.
Thank you.
Thank you.
Thank you.
Everyone.
Have a good day, everyone.
See you guys.
Bye.